Hello, boys and girls. From this video, I'm discussing property, plant, and equipment, and based on LKAS 16, and the things that you should know when you are facing A-level accounting, mainly for the local syllabus, right? And yes, before that, these are the books that I already published through my Sihina publications, and these are self-study booklets. You can purchase these books from me and do yourself, correct yourself, and then for the clarifications, you can watch the video for each exercise through my YouTube channel, right? So if you want to purchase, just send me a WhatsApp message. And yes, it's available for cash on delivery and bank transfers too. Right? So let's go to the lesson. And yes, property, plant, and equipment. So first of all, what are these property, plant, and equipment? So these are the tangibles. These are the tangibles. Tangibles mean the things that you can touch, right? Are held for use in the production or supply of goods or services for rental to others or for administrative purposes and are expected to be used during more than one period, right? So this is the simple definition, and that appeared in LKAS 16 standard 2, which mean what is the proper plant and equipment, right? And here the cost of an item of proper plant and equipment shall be recognized as an asset if and only if. So this means this is the basic recognition criteria for an asset, for any asset, right? It is probable that future economic benefits associated with the item will flow to the entity, and the cost of the item can be measured reliably. These are the common recognition criteria of any asset, right? And this standard, the objective of LKS 16 standard is to prescribe the accounting treatment of proper plant and equipment so that users of the financial statements can get the information about the entity's investment of these assets, these proper plant and equipment. So keep in mind, from this video, I'm only discussing the things that you should know that in frame of A-level accounting syllabus, right? There is more things that in standard, but here I'm only discussing the things that you should know when you are facing the A-level accounting examination, right? Okay. So the content of this video, first thing I'm discussing definitions, the definitions, the terms that you should know when you are learning LKS 16 proper plant and equipment, and then the accounting part, measurement at recognition, measurement after recognition. You can follow up by the cost model or the revaluation model, and depreciation, revaluation, and purchases and disposals. So this is the content that I am discussing this video. So again, I am telling here, I am discussing only the parts that are relevant for your A-level accounting syllabus from LKS 16 proper plant and equipment. So this standard is a very long, there is a lot of contents that you should know, but from here I am discussing only the parts for the A-levels, right? Okay. Definitions based on LKS 16 proper plant and equipment stand. So first of all, keep in mind these are not my wordings. These are 100% extracted from the standard. So the objective of giving these definitions here to get the correct idea, to understand well the things under LKS 16, you should know the correct meaning of these terms, right? So that's why I extracted these definitions to my presentation. So carrying amount. Carrying amount is the amount at which an asset is recognized after deducting any accumulated depreciation and accumulated impairment losses. So these accumulated impairment losses are not discussing under that, not relevant for the A-level syllabus, local A-level syllabus, but yes, the accumulated depreciation. So the carrying amount is cost minus accumulated depreciation. And the cost is the amount of cash and cash equivalents paid or the fair value of the other consideration given to acquire an asset at the time of its acquisition or construction or where applicable. And the depreciable amount is cost minus cost minus residual value. the amount that you can depreciate of the proper plant and equipment. So how to find out that? Again, cost minus residual value. And the depreciation is the systematic allocation of the depreciable amount of an asset over its useful life. So yes, we are discussing these things throughout this video. And this is also new. This is also not relevant for the local syllabus, A-level local syllabus, but I put that in my video. Entity specific value. Entity specific value is the present value of the cash flows an entity expects to arise from the continuing use of an asset and from its disposal at the end of its useful life or expects to incur when setting a liability. And if you are sitting for a local A level, so just ignore that, right? Fair value. Fair value is the amount of amount for which an asset could be exchanged between knowledgeable, willing parties in an arm's length transaction. So, what is this arm's length transactions? So, this means without the conflict of interest. Likewise, you can't purchase a car from your father at the exact fair value because there is a conflict of interest. You are the son of your father, right? So, without those attachments, the fair value is comes from arm's length transaction without the interested parties, without the parties that knows each other, friends to friend, father to son, mother to daughter, like that, right? So impairment loss, and impairment loss is the amount by which the carrying amount of an asset exceeds its recoverable amount, and recoverable amount is the higher of an asset's fair value less cost to sell and its value in use. Residual value, the residual value of an asset is estimated amount that an entity would currently obtain from disposal of the asset after deducting the disposal expenses. And the useful life is the period over which an asset is expected to be available for use by an entity or the number of production or similar units expected to obtain from the assets by an entity. So for local A levels, fair value, residual value, useful life is more important, right? Here comes the accounting parts. First thing, measurement and recognition. So you can measure a property, plant, and equipment at its cost, right? Only at its cost. But here also the cost is not only the purchasing price. There are more, right? It purchasing price including import duties and non-refundable purchases taxes after deducting trade discounts and rebates. Any cost directly attributable to bringing the asset to the location and condition necessary for it to be capable of operating in the manner intended by the management. And the initial estimate of the cost of dismantling and removing the item and restoring the site on which is new purchase PPE located. So just assume that you are purchasing a new machine and then you are disposing the old machine. So that dismantling and removing cost of the old machine you should include when you are identifying the cost of your new machine, right? If it is replaced in the same location, right? So, what are the examples of directly attributable cost? The things that mentioned here. Cost of the employee benefits arising directly from the construction or acquisition of the item of PPE, cost of site preparation, initial delivery and handling cost, installation and assembly cost, and the professional fees. And what are the things and that we are not considering when you are measuring the cost of the proper plant and equipment and the recognition? Cost of the opening a new facility, cost of introducing a new product or service, including cost of advertising and promotional activities, cost of conducting business in a new location or with a new class of customer, or administration and other general overheads, and the staff training cost. So these are the examples for the cost items that you are not including or not considering when you are measuring the proper plant and equipment cost at the initial spot, right? Let's discuss an example for measurement and recognition, right? So here my activity is Elephant House PLC purchased or purchasing a machinery on 1st of April 2025 And this information is given relates to that. So first thing, purchasing price 12,500,000 and the discount received at the purchase is 400. Yes, you should include this purchasing price after deducting the trade discount. Here, purchasing price 12,500,000 and the trade discount is that 500,000 you should minus. Import duty is 240,000 and non-refundable duties 60,000. Yes, so these two also you should add when you're finding the cost of the machine, import duties and non-refundable taxes. 45,000 has been incurred as in transport cost, so which means the carriaging was you should add. And 25,000 and 35,000 respectively have been incurred to the site preparation and fixing the machine. Those two also you should add when you're finding the cost of the machine. And the other one, 64,000 worth of engineering service. Yes, the professional fees when you're paying at the recognition of the initial measurement, you should add that to the cost, right? And after fixing, a test run was carried out and raw material cost 27,000 was incurred for testing and it is received a net sales value of 57,000 by selling of the samples produced during the test run. This is a bit important thing here. Before 2022, we should consider the net amount of these and should minus here when you're finding the cost, which means here you are getting the net sales 57,000 and the raw material cost 27,000, right? So net cash inflow is there 30,000. So that 30,000 you should minus when you're finding the cost of the machine. But after 1st of Jan 2022, based on the new amendment of the case 16, the changes, these two, you are not identifying under cost of the machine, right? So this 27,000 you should record as an expense, and this 57,000 you should record as in sales in income statement, right? And 16,000 was incurred to remove the old machine to fix the new machine. Same location. If you are replacing the old machine with the new machine, the dismantling or the removing cost of the old machine you should add when you are finding the cost. And 24,000 was spent on the opening ceremony. We are not adding that. And same day, 36,000 annual insurance. These are expenses and these two you should record in income statement as well, right? So this is an example. So finally, the cost of the machine is 12,485,000. I think you get the clear idea. You got the clear idea about the measurement and recognition, right? And measurement after recognition. So at the measurement of recognition, which means the measurement at the initial point, you should measure at the cost, right? There is only one method, only cost. But after recognition, and then you are using this proper plant and equipment in your business. So there are two modules that you can measure the proper plant and equipment as cost model or the revaluation model. So cost model mean here what we are doing after recognition as an asset, an item of proper plant and equipment shall be carried at its cost less any accumulated depreciation and any accumulated impairment losses. So here simply what meant by here, you are doing normal depreciation based on the useful life and then you are recording the accumulated depreciation and cost just like that. But revaluation model means you are revaluating the carrying amount for the current market price, current fair value, right? After recognition as an asset, an item of property and equipment whose fair value can be measured reliably shall be carried at a revalued amount. Being its fair value at the date of the revaluation less than subsequent accumulated depreciation and impairment losses. So revaluation shall be made with subsequent regularity to ensure that the carrying amount does not differ materially from that which would be determined using fair value at the end of the reporting period, right? So you can carry out either cost model, the revaluation model after your recognition, after you recognize the proper plant and equipment at cost in the initial point. After that, when you are doing accounts, you have to follow up cost model of the revaluation module. So simply cost model is you are doing depreciation based on the useful life and then continuously recording that. But the revaluation module mean you are revaluate the carrying amount with the current fair value, current market price, right? So we have to do the account for both together. Depreciation methods. So there are three depreciation methods according to LKAS 16 for plant and equipment: straight line method, diminishing balance method, and the units of the production method. So from these three, you should know how to do based on straight line method and diminishing balance method, and most commonly in LOs using straight line method. So in straight line method, divide the depreciable amount, which means cost minus residual value of PPE over its useful life. And the diminishing balance method means to find out depreciation, here you have to decrease charge over the useful life. So simply how to find out that in exercises they are giving the reducing balance rate. So at that date you have to minus cost, you have to minus accumulated depreciation from cost and get the carrying amount. And to that carrying amount, we have to calculate the rate given, right? So those two you should know. And the units of production method. So this can use for the machines. Just think that from a printer we can get 100,000 outputs. So based on that 100,000 outputs and based on the usage of that printer, then you can do the depreciation. So this is not comes in A levels, right? So the entity selects the method that most closely reflects the expected pattern of consumption of the future economic benefits involved in the asset. That method is applied consistently from period to period unless there is a change in the expected pattern of consumption of those future economic benefits. And yes, there is another important fact here. So change in the depreciation method is a change of an accounting estimate. It's not a policy change. It's a change of accounting estimate. So we have to learn that under LKS 8 error, LKS 8, yes, errors, change in policy, change in policies and accounting estimate. So keep in mind, changing depreciation method falls under accounting estimates changes, right? Here I summarize some important things that help in your adjustments. So after the recognition of proper plant and equipment at the initial point, there are two costings that can be incurred. One is capital cost and the other one is subsequent cost. So capital cost means the cost that affect into the positive effect of the proper plant and equipment. As an example, as examples, increase of the production quality, increase of the product productivity, increase of the product volume, or increase of the lifetime, or affecting to decrease the maintenance cost. So those uh, likewise, so those cost items you should capitalize to the cost, which means you should add that to the cost, right? So subsequent cost are the day-to-day expenses that relevant for the plant and equipment. Likewise, you are servicing your motor vehicle, right? So those services, repairing costs, maintenance costs. So those day-to-day expenses you should record as just an expense and in the income statement, right? And here it says PP is revaluate the entire class of proper plant and equipment. You should revaluate. So what is this? So let us assume that you have three buildings, building A, building B, building C. But in books, you have to consider all those buildings at once and then record the values over there. So if you reevaluate one out of that, you have to reevaluate the other two as well, right? You have to reevaluate the entire or the all types of buildings and then record in your books, right? And each part of an item of PP with a cost that is significant in relation to the total cost of an item shall be depreciated separately. This is a very priority coming for the A-level accounting, advanced level accounting. So this meant by let us say that you have a aircraft. So in that aircraft, engines you should reevaluate in a separate manner, and the wings that you have to reevaluate in another way, and the chairs, right? Chairs and the other cases you have to reevaluate in the other separate way. But at the end, all those depreciations you should add and then record as a aircraft depreciation, right? And here the sample sales mean the sales that coming from the test run, and the income and the raw material cost used at the initial test run should disclose separately in the profit or loss. So I discussed this earlier at the measurement of recognition. And the depreciation should calculate when the considered PP are available for use, right? And it is not matter that it's currently using or not. So let us assume that you purchase a vehicle, but it's not registered yet. So which means you purchase that vehicle, that's correct. But if you didn't register that, you can't use that in your business. So which means that is not available for use. So you can't depreciate that. And let us say that you are currently using a motor vehicle and motor vehicle met an accident, and then the motor vehicle you can't use, and motor vehicle you should repair at the garage. For that time, you can't depreciate that motor vehicle, because you are not, that motor vehicle is not available for use. But let us assume that there is a motor vehicle or registered and it's available for use, but you are not using that. That doesn't matter. If the proper plant and equipment is available for use, then you have to do the depreciation for that, right? And the depreciation method, the residual value and the useful life of an asset shall be revived at the least at each financial end, and if expectations differ from previous estimates, the changes shall be accounted for as a change in accounting estimates in accordance with LKAS 8 accounting policies, changes in accounting estimates and errors. I mentioned that earlier, right? The depreciation method changes, the residual value changes, and the useful life changes of proper plant and equipment we should consider as changes in accounting estimates, not changes in policies. Okay. Property, plant and equipment revaluation. So property and equipment revaluation we can discuss in two categories. First time revaluation and the second time revaluation. So first time revaluation is you are evaluating a proper plant and equipment uh, for the first time, right? So first time revaluation, a revaluation surplus. If you gain a revaluation surplus, and that revaluation surplus you should add to the cost, and revaluation reserve should credit. And if you are getting the revaluation deficit, and that revaluation deficit you should debit. So which means that is an other expense. So it falls under other expense, and that proper plant and equipment cost account should credit, right? So as an example, in 2025, you purchase a land for 5 million, and now in 2024, the fair value of the land is now 8 million. So if you reevaluate this land for today's value, it's gained a revaluation surplus of 3 million. And that 3 million you should add to the land and then credit to the revaluation reserves. But before crediting to the revaluation reserve, you should record that under other comprehensive income in the income statement, right? And in the deficits, in 2021, the land you purchased for 5 million, but the today's value is 3 million. So after 3 years, in today, that land is reduced, the land fair value, the market value is reduced by 2 million. And that 2 million you should consider as an expense, right? So revaluation deficit debit, and that revaluation deficits you have to record under other expenses, and land account should credit. This deficit you should minus in land uh, from the proper plant and equipment. So when it comes to the company's accounts, these things you have to adjust under proper plant and equipment note. If it is a revaluation surplus, that surplus you should add to the considered proper plant and equipment. And if it is a deficit, you should deduct that deficit, revaluation deficit, from that proper plant and equipment, right? And if it is a revaluation surplus, that revaluation surplus, first of all, you have to record under other comprehensive income and then move that to the revaluation reserves at the balancing. And if it is a deficit, that deficit you should record in other expenses, right? So when it comes to the evaluation of depreciable property, plant and equipment, you can't just get the revaluation surplus or deficit by comparing the cost and the revaluation value. Likewise, you did on land, right? Because these are depreciating. So to find out the revaluation surplus or deficit of the depreciable property, plant and equipment, you have to get the carrying amount first. So how to get the carrying amount? Cost minus accumulated depreciation. So when it comes to the revaluation of depreciable power plant and equipment, first of all, the accumulated depreciation up to revaluation date, you have to transfer from accumulated depreciation account to the cost account, and then you can find out the carrying amount. So carrying amount means cost minus accumulated depreciation, right? So if the revaluation value is higher than the carrying amount, it's a revaluation surplus. And if the revaluation value is lower than your carrying amount, it's a revaluation deficit, right? So that's what I mentioned here. And when it comes to revaluation for the second time, first clear this. Let us say that at the first time you got the revaluation surplus, and also the second time you are getting the revaluation surplus. So that doesn't matter. You can record as in the normal way how you are recording the revaluation surplus. And also for assume that in first place you got the revaluation deficit, and also for at the second place, second time you got the revaluation deficit as well. So same thing, the way of recording the revaluation deficit, you have to record that. But the case is, if the first time revaluation you have a surplus, and the second time you are getting the revaluation deficit. So in these cases, from second time revaluation deficit, you have to written off the revaluation surplus at the first time. And the remaining balance you can record in other expenses. I am explaining this from an example in a slide. And the other case is if it is a first time revaluation deficit and then you are getting the revaluation surplus in the second time. So from the revaluation surplus that you are getting from the second time, you have to written off the revaluation deficit that you got at the first place in other expenses. And the remaining balance you have to record as revaluation surpluses on the other comprehensive income. So I am explaining all these revaluation at the first place and the revaluation for the second time with an examples in next slide. Okay, yes, let's move to next slide. So from this example, I am discussing the probability equilibrium revaluation that comes in different ways. And here the following is the information of PPE of Single PLC as in opening date 1st of April 2024. And these costs and the accumulated depreciation are given as in opening date. Land, buildings, motor vehicles, machines, and office equipments, right? And these are the additional information. And let's look one by one. Land should revalue for 3,250,000 on 31st March 2025 as at closing date. So land revaluating is a very easy case because land is not depreciating, so nothing to do about depreciation. So you have to find out revaluation by comparing the cost and the revaluation value. And your land cost is 3,600,000 and you are revaluating that for 3,250,000, and at the first place you are getting the revaluation surplus of 350, and that revaluation deficit, revaluation deficit 350, and that you have to record under other expenses. And the second one, building should revalue for 3 million on 31st March 2025. So here the case is you are evaluating buildings as a closing date. So which means first you have to find out depreciation as usual and then you have to do the revaluation. Buildings cost you 3,200,000 and then the useful life is 16 years. So 3,200,000 divided by 16, the current year depreciation is 200. So you have to record that 200 depreciation and then you have to do the revaluation. You found the current year depreciation and then you have to do the revaluation. So at the revaluation point, the total accumulated depreciation as in closing date, you have to transfer from accumulated depreciation account to the cost account. Here the opening accumulated depreciation of buildings are 1000 and the current year depreciation 200. Total 1200 you should transfer from buildings to accumulated depreciation to the buildings cost account. Right? Then you can find out the carrying amount. Your building's balance, the cost is 3,200,000 and it almost depreciated, which means the accumulated depreciation is 1200. So 3,200 minus 1200, the carrying amount of the buildings as seen as on revaluation date is 2000, right? So what we are doing here, 2000 carrying amount worth buildings, you are evaluating for 3000. From that, you are getting the revaluation surplus. So keep in mind when it comes to the depreciable proper plant and equipment, first of all, you have to get the carrying amount and how to get the carrying amount, cost minus accumulated depreciation. And that carrying amount is the amount that you should compare with the revaluation value. So the carrying amount, these buildings are 2000 and 2000 worth buildings you are evaluating for 3000. So which means you are generating 1 million worth. Yes, 1 million worth building revaluation surplus, and that thing you have to record in other comprehensive income, right? Third one, motor vehicle should revalue 2,400,000 on opening day, and the remaining useful life is given. So these motor vehicles are revaluating as in opening date. So in this case, you have to first do the revaluation and then do the depreciation based on the new values. So up to revaluation day, so which means as in opening day, the accumulated depreciation is only 900. And that 900 should transfer from accumulated depreciation to the motor vehicle account. And 2700 minus 900, the carrying amount of motor vehicle at the revaluation date is 1800. So here what we are doing, 1800 worth motor vehicles, you are evaluating for 2400. So from that, it generates 600 revaluation surplus. And that you have to record in other comprehensive income, right? And then you have to find out depreciation based on the new values. And it says after the revaluation, the remaining useful life of those motor vehicles, they calculated as 12 years. So the new value of the motor vehicle is 2400. New carrying amount is 12 years. So 2400 divided by 12 years. So you are getting the current year depreciation 200. Right? Fourth one, machine should revalue for 2 million on closing date. So and 240,000 revaluation deficit was resulted from the last revaluation. So these machines are revaluated for the second time. First of all, the same thing that you have to mention in the note number 4, and here you are evaluating these machines as in closing date. So which means you have to find out depreciation as in normal way and record that. These machines cost are 2,400,000 and the useful life is 12 years. So 2,400,000 divided by 12 years, it's 200. And total transfer 920. So 2,400 cost and depreciation accumulated 920. The carrying amount of the machines are 1,480,000 at the revaluation date. So here 1,480,000 worth machines you are evaluating for 2000. So there is a revaluation surplus of 520. So if this revaluation surplus you are getting from the first time, this 520 total amount you should record in other comprehensive income. But case is these machines it gained a revaluation deficit from the first time. So in first time there is a revaluation deficit and from the second time it's a revaluation surplus. So from this revaluation surplus you should written off the last year revaluation deficit. So the revaluation deficit you should written off from other expenses here, and the remaining amount is the amount that you should mention in the other comprehensive, right? And the final one, office equipment should reevaluate at 800,000 for the second time, and there is a revaluation surplus from the first time. That doesn't matter when you're doing the revaluation. First of all, find out the revaluation. And these office equipment you are evaluating as in closing day. So first you have to find out depreciation, 2000 minus 10 years, 200. And the total accumulated depreciation you should transfer from here to here. And 2000 minus 680, the carrying amount of the office equipment is 1,320,000. So that 1,320,000 worth of office equipment you are evaluating for 800, and from that you are getting the revaluation loss or deficit 520. And if it is a first time revaluation deficit, you have to mention that total amount in the other expenses. But in this case, these office equipment was revaluated at the first, and then it's gained the revaluation surplus of 320. So from this year revaluation deficit, you have to written off the last time revaluation surplus. So where you written off in the revaluation surplus under the comprehensive income. So from here you have to minus 320, and the remaining amount you should record in other expenses, right? So I'm thinking that you got the 100% clear idea what you should do when it comes to the proportional and cumulative evaluation, either first time, the second time, right? The last case I'm discussing from this video, purchases and disposals of PPE. So we will discuss this through an example. And these are the information given for Abbas PLC as in opening date, 1st of April 2024. We have land, buildings, motor vehicles, and machines. And these are the cost and these are the accumulated depreciation given as in opening date. First thing, part of land worth 750 was sold for 920. So 750 worth of land, so that amount you should dispose here, and then you are disposing that for 920. So the difference of that you should consider as land disposal profit, because land is not depreciating. So just the cost of the land and the difference of the disposal value is your profit or loss, right? And then the building worth 1 million was sold for 875 as in closing date. So if it is selling as in closing date, first of all, you have to find out depreciation as in usual way. So 2000 divided by 20 years, 200. And then you have to do the disposals. So when it comes to the depreciable proper plant and equipment, you should dispose the cost as well as the accumulated depreciation, right? So the cost of the buildings here you are disposing 1 million. So which means the half of those buildings you are disposing here. So the accumulated depreciation, from the accumulated depreciation, you have to dispose half of the accumulated depreciation. So opening date 800, this year 200, altogether 1000, from that half 500. So disposing 1 million cost here and disposing accumulated depreciation here. So 1 million is the cost, and as in disposal date, the disposal, so accumulated depreciation is 500. So the difference of that is the carrying amount 500. So here what you are doing, you are selling 875 this building. The carrying amount of that is 500. So there's a disposal profit 375. And last one, the car worth 400,000 was sold as in opening date. So if it is happens as in opening date, first you have to do the disposal and then do the depreciation on remaining motor vehicles. So here you are disposing 1 over 4 can, which means part of motor vehicle, and disposing cost here, and also you have to dispose accumulated depreciation 1 over 4 of the balance, right? So 400 and minus 160 as in disposal date. The carrying amount of the motor vehicle is 240, and that 240 worth 240. Yes, 400 minus 160, 240. So 240 worth motor vehicles you are disposing for 150, then you are getting the disposal loss 90, and that should falls under the expenses. And here it says purchase a machine worth 800,000 on 1st of October and the other machine on 1st of Jan. So the purchasing dates are different. Then you have to find out depreciation for each one separately according to the available of use, the time duration, and then altogether you have to find out the total depreciation and recording in proper plant and equipment note. So first of all, there are existing machine 1,200,000 which have 8 years useful life, and the depreciation for the current year from that is 150. And the new machine that you purchase on 1st of October, you have to find out only 6 months, the depreciation for 6 months. And it says the useful life 10 years. So 800 divided by 10, you are getting the annual depreciation, and that you have to divide by 2. Then you are getting the depreciation that will run for this year. And the last one, the other machine you purchase on 1st of Jan, so which means only 3 months, 1/4 year. 1 million divided by 10, 100 annual depreciation, and that you should divide by 4 to get the current year depreciation, 25. So altogether, your total depreciations are 215 of that machines, right? So this is a bit uh, a long video because these power plant and equipment. So these power plant and equipment, the things from power plant and equipment, the adjustments are comes all over the paper in MCQs, in the companies, partnerships, non-profit organization, incomplete records, manufacturing, all those cases, and even in investment decisions, cash flow estimating. You should know how to do the things under proper plant and equipment, which means depreciation, disposals, revaluation, all these cases. So that's why this video take more than 40 minutes, right? So if you learn anything, even a word from this video or from my discussion, just put a comment, and that is the best gift that I am getting from you, right? And then also, do share with your friends, and if you want books, workbooks, just send me a message to WhatsApp, right? So keep in touch. I will upload a lot of videos in theories and adjustments related to the A-level accounting, right? So until that, good luck. Do your best, earn your best, and just do your studies well, right? Okay. Bye.